Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Prashant and Sonia as always, and of course we start a very important and big week. This one, the market is at a very important level. The trend line that we keep talking about, it looked like the market had overcome that, but now back below that. So very important make or break zone. 17,700 is that level, that precise level, the fulcrum of that all important trend line. We'll discuss that. Why is that important? Because this week you have the Fed decision, which is imminent, of course. 75 basis point rate hike is fully in the price, but can there be 100, which is something which the market will debate. And that becomes important because once again you've started to see FI selling, but that on Friday was attributed to rebalancing. So I think today perhaps could be a bit of a test. The SGX Nifty is indicating that we'll have a flat start, and then we'll take it from there. Prashant, Sonia, hi, good morning.
Hi, Anuj. Morning. Welcome back. Prashant, hi, morning. And it's good, right? I mean, the SGX Nifty is suggesting a pause. That's, I think, the best case scenario. People don't want to retreat, perhaps. So that's the big question. What happens this week? It's an all-important week, not just the US Fed meeting that begins tomorrow and then we'll get to know on Wednesday. But there's also the Bank of Japan rate decision that takes place. So in that context, a lot of important central banks across the world are meeting this week. And in all likelihood, there will be rate hikes across the board. So we'll have to negotiate that as well. The Dow was down quite a bit, but in our own markets as well, right? Both foreign and domestic investors have now turned sellers. So there's a point of caution there. FI sold to the tune of almost 3,300 crores. There was small selling by DIs, but selling nevertheless. The Nifty was down almost 2% last week. There were huge cuts on large technology stocks. So there is, of course, caution ahead of the Fed decision. The 20-day moving average is what the Nifty slipped below. So the 20-day DMA is 17,680. The question we're asking this week is, will the Nifty continue to trend lower, or will it just take a bit of a breather before that big event and just wait for that event to move out of the way? That's the million-dollar question, right? I mean, generally, if you go by history, then global events like this have not rattled Indian markets too much. Do you think this time around things could be different?
Well, let's wait for the market to answer that, Sonia. But, you know, Friday's bar is very big, the red bar. And, the way market effortlessly took out Tuesday's low and closed at where it is, I think I don't believe this SGX Nifty rate. Normally, I say that on the upside. Today, my sense is perhaps the market has one leg of downside left in it. Remember, on Friday low was 17,497 thereabouts, below 17,500. I think we perhaps, my sense is, go below that, even if the market has to recover after that. Having said that, India is a market which has outperformed despite the last week's decline. And last 2 days in particular, the market declined quite a bit. So today's market becomes very important to track in terms of the texture, whether that buy on dip texture is still intact. The Nifty is trading below all the near-term momentum indicators, the 5-day, 10-day and the 20-day exponential moving average. It's trading below that. So the all-important support now is at the 50-day simple moving average and 50-day exponential moving average. What's that zone? That zone is 17,190 to 17,300, and that is a make or break zone for the market. And I think the key for that is on the Bank Nifty, because that's been a very strong index. Even in the downside, as you saw on Friday, it was down 1%, while the Nifty was down 2%. So it's still trading between the 5 and 10-day exponential moving average. So still a bit stretched, but if it sort of goes towards say 40,400, I think that's where traders may want to explore some long positions. But if it closes below 4,400, I think that's when you will revisit what's happening to the Bank Nifty. And why is Bank Nifty important? Because we know that one pocket of the market, which is Nifty IT, is firmly in a bear market. I mean, there will be tactical rallies in between, like we saw last week, but all those rallies are selling opportunities. That index is now within 2% of 52-week low. So the medium-term focus really has to be on the economy-facing stocks. Look at that, Nifty IT, 1 month 11%, and the Nifty Bank is up 2.8%. Now, in between, you'll have rallies, which you can play and should play, but the larger trend of IT is down, banks is up. I think that's the trade which might continue up until the year end or so. Prashant, hi. All-important Fed meet, right?
Finally, all-important Fed meet. So, yeah, 75, as you said, is perhaps in the price. Absolutely, it's been fully priced now. And the Fed is most likely going to sound hawkish. The messaging is going to be pretty hawkish. The dot plots in terms of where the Fed expects rates to be, that perhaps will move higher. And, expect So last week, if you remember, the big sort of talking point was the consumer price inflation number. That was a defining number, right? The US market fell 4% that day. For the week, US markets were down between 5 and 6%. But so, I mean, expect the Fed to do nothing, but reiterate unconditionally that their aim is to bring inflation lower, down to that 2% level. So I think that remains very much the case. We are once again in a bit of a risk-off kind of environment globally, a fresh leg. So, as I said, the S&P was down 5, the Nasdaq was down Friday to Friday by 6%. Rates are higher, both nominal and real. So, US nominal 2-year, 5-year, 10-year yields were up 30, 31, 20 and 14 basis points. These are very sharp, large moves. And these are nominal yields, but real yields have also moved up on an average by between 15 and 20%. So things are, on the rates market, there is a fair bit of repricing which is happening. Fed pricing, in terms of what the Fed will do by the end of the year, went up a cumulative 35 basis points last week. So again, important. Commodities are lower by about 2% week on week. You know, this is equities down, yields getting repriced higher, commodities lower. This is a dollar supportive regime, which is starting to make a bit of a comeback. Mind you, when we get the Fed decision, I've said this before, going into Fed meetings, that day, I mean, the decision day, usually the dollar is weak, but that reverses very quickly. So don't take that one-day reaction as, the base case. It's happened so many times in the recent past. We don't have to go very far back. It's all about positioning and, what is in the price and what really comes through and wordplay, all kinds of things. But that's just one day. But this regime is largely dollar positive is basically what I'm getting at. And just look at what the markets have done. Last week, on pretty much any time frame, last week, US was down, as I was saying, 5-6. The market here was up 0.5%. Year to date, I mean, the US is down 19%. We are up about 1% or so. So, I mean, this is the larger kind of debate and larger questioning. You can have bouts of outperformance, sure. They can last for weeks on end, sure. But can this go on? Or will there be a bit of mean reversion, which will happen back to what the globe is doing? And that is something we will find out. We got a look at that last week, Thursday and Friday. We'll see if that continues this week as well. Sonia.
Absolutely.